What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown. If you've been around the channel for any length of time, you know that I regularly show you charts of whether it's the Federal Reserve's balance sheet or gold or Bitcoin or the markets. Always showing you different charts, pricing charts, and sometimes we touch on technical analysis, a little bit of charting. So today I wanted to bring in my good friend Patrick, expert on technical analysis and charting. We're going to do a little bit of an overview on some various charts, talk about what technical analysis is, what it's good for, what it's not good for, and we're going to look at some good examples of how it can be used in real life practice to help you enter and exit positions successfully. Thank you so much, Patrick, for joining us today.
Well, Joe, it's a total honor. Your show is huge, and yeah, I'd be happy to try to demystify technical analysis, and bridge the gap between people who've never heard of it, who think it's voodoo, and why it could give you an edge as a trader.
Yeah, absolutely. Well, let's start off with what is technical analysis with a brief definition and explanation of what charting is.
Look, the best look. Chart trading is the representation of human emotions. So if you don't focus on like drawing lines, human greed, humans when they make a lot of profits, they take they start selling, and then when after that the past success of a chart of price action going up, then everybody goes to your ears, right? The water cooler. Oh, Bitcoin's at 60,000, man. This guy made 100%. That's the greed that gets in, and then those are the people like usually buying at tops. But all this price action going on, you could actually see in the chart. You could see when the price drops, like a vertigo, like a roller coaster down. You could see with like a volume profiling that there's not a lot of people that bought at that area on the way down. So after all these bag holders that had to take for profit loss, they had to close their the positions. They had to exit because they gave up. They don't believe in the chart anymore. That creates a huge base. And that base creates the opportunity for anybody when nobody's talking about silver back in 2019, nobody's talking about inflation in 2019. If you look at the charts, of course, nobody's talking about it. It didn't perform. It's not in everybody's ear, but that bad performance identified through the chart. It's creating that opportunity for anybody who's looking at the chart. And you'll never see that if you don't look at the charts, because humans are always going to wait for their best friend to tell them what's to buy, what's popular, but it's too late, guys. Honestly, when you hear about it, usually you're buying close to the top. It's like, that's why I fell in love with TA, because I was buying penny stocks, almost getting wiped out multiple times until I realized, oh my God, Patrick, you bought after parabolic top. Like I would never do that now. So hopefully we get to help people with TA.
Well, there's two sayings that I really like about technical analysis. One of them is something I've repeated quite often, that it's that charts are just a visual representation of the aggregate of group behavior, and patterns emerge out of group behavior in complex systems. And then number two, fundamental analysis might tell you what to buy. Technical analysis tells you when. And so, what do you think about those?
Well, definitely. The human behavior through patterns, through the charts, you'll see, because you'll be able to see your emotions when you bought or you sold. Looking in hindsight of the chart, you'll start to understand why the chart is telling you where you were positioned emotionally when you got in. And the hardest part is like to buy there when there's fear, where every rally, it's like it can't go up, inflation's transitory, or like. But the chart gives you comfort because you could see those bullish technicals. But fundamental, look, charts, they'll do what fundamentals do. They'll do more because it'll tell you what to buy. Charts. It's not fundamentals that's going to tell you what to buy. Yeah, okay, good story. But of course, if the second half, the timing's wrong, what's the use of being right? Look, in hindsight, I wrote something way back. I made profits. I had a theory in my head. Oh man, it's solar panels. Silver has to go up. Then 5 years later, I realized that it was something totally different. It was inflation, the US dollar going down. It was a whole bunch of other stuff aggregated together, moving the price. It had nothing to do with my theory. I was so lucky. So guys, with fundamentals, unless you think you're smarter than about 10,000 analysts out there pushing billions of dollars behind them, it's a risky game. You might sleep at night, but remember, one day you'll realize that, Jesus, what if you're wrong fundamentally? The chart's going to tell you when and what the market thinks should be bought or sold.
So then for anybody who hasn't had any experience or looked into this at all, what are some of the most basic technical analysis tools, like, support resistance, things like that?
Yeah. Look, so right now on the backdrop is the silver chart I did back in May or June of 2020, guys, right before it broke out. So my biggest recommendation, guys, don't try to play for beginners daily charts where you think it's going to go to you want to make huge profits right away. Zoom out. These are monthly candles. So every candle, there's 30 days. And zoom out as much as you can, 10 years, 5 years. You got to get data because, like you said, those cycles, if you're too zoomed in, you won't see the macro, the macro tidal waves of capital flows that can help sustain moves. So on this chart, horizontal breakout lines is usually like the point of recognition. If you can identify based on closes of monthly close and the wicks, that's like noise from smaller time frames. If you start identifying a place where on a monthly close basis, the market refuses to close above, then you know that the day that you do close above, something like important is happening. Is the market saying, okay, we can't keep a lid on this. People are closing the books monthly or even quarterly candles. People have to close. That's a first great signal right here. So here you could draw a first line. Then you could draw lines additionally based on, here's my volume profiling, guys. This is not a lot of people use this, but this for rookies is the best thing because this volume profiling tells you how many transactions happened for that price range, not over the time, but from in between $13 all the way to 19, that high volume peak here, that means most of the people, they transacted around $17 for silver. So you could say that's a fair value for silver for the past, for that base, for that 6-7 years. But as soon as you start sliding above that, that's the opportunity because remember, like I said, all the people that bought on the way down, they transacted, they got out, people got in. As soon as you start sliding up here, then you could see the advantage because here you see how there's almost no more transactions here. It's because on the other side, it fell so fast. You didn't have time to sell. So all the bag holders got trapped up here, creating a mountain. And after that, it fell down. And what happened to silver once it closed above this huge volume defined base? We all know what happened. It just rocketed all the way up to 29 until it hit here because it's disproportionate to that size there. But here, there's a lot more volume here of that top than there was on the way there. So just this volume profiling, just spotting where the horizontal breakout lines is, you don't need fancy indicators. You'll see my charts. I rarely put 100 indicators. You see that? It's all messy. It's simple. I know it looks easy because I'm explaining it, but when you start seeing patterns and start understanding that these are parabolic melt-ups, once you break down, you don't come back. You need multiple of years to recuperate from a parabolic breakdown. But guys, when you see these bases, chance of a lifetime, guys. It took 7 years. All these unlucky guys that bought here, you're coming in just at the best time. It's insane.
And I want to point out that this chart was, if you look at the dates on there, this was made in 2020. And all those lines that you have on there showing, hey, we're consolidating here along this base. We're getting closer and closer to a breakout, building energy. Once it did break above, it hit the targets where exactly where you'd expect. You'd expect it to then fill that gap where there's historically no volume and get right back up to where it was before, where there's a lot of volume, and encounter new resistance at that point. And that's exactly where it hit, 28, 29. And then it's been, consolidating in between there and like $21 since then.
Exactly, Joe. Look, if I may, just for silver to continue. So after it exploded, I did this chart right when the fear of missing out was crazy. Everybody's talking silver. Silver was at 28. It was going day after day up. But I took a step back and I said, okay, this is getting out of hand. Every day I was putting rocket ships on my charts. My follower count was going like a rocket ship. But you zoom out, and here on top is a month. It's a yearly closes. The higher the time frame you have a close, if you can't close above that, that is critical support or resistance. And right here in the 70s, even if we had a spike, we're never able to close above that 31 level. In the 2000s, for 4 years, like everybody says, silver $50. If it's nothing, you didn't stay there a long time. It's not meaningful. But on the yearly closes, you see how many times. So for me, $31 is way, way more meaningful for silver than any other type of, if we're going to go to my huge targets I have for silver, you have to have a yearly close above 31 for game on. And what's happening here, you don't see that on a smaller time frame. So the guy zoomed in, that's a weekly chart. Everybody was looking here at $40, $50 when it was going up. But you see, there's not a clear line at 31 right here, Joe, but you could only see that if you go on the higher time frames. And it stalled right there at 31. I think it clipped it. And then after that, I said, okay, what's next? The lines, they love getting retested. So if we couldn't get above 31 on this shot, then it was a natural target that we'd go back to 2150 or retest those highs off of 2016. And I'm pretty sure we came to a penny. Look, it just happens like that. Zones, breakout lines are more like you have to see them like areas, you know, like sponges you could seep through and back up. But it came back here. So yeah, that's why TA helps you guys. When you see me put rocket ships, or people say, oh, Rick Rule saying, well, sorry, Rick Rule, like, I don't know you, I don't want to put you on the spot, but anybody saying buy silver here in August of 2020, well, you should realize that you were starting to get stretched from that moving average, and you were at a higher risk entry than low risk entry at that moment. Just like the
well, before we move on, I want to make a couple of points back about that prior chart there. So a couple of things just to recap. Number one, it's important to look at different time frames because markets are fractal, and so you can zoom out and you can see similar patterns, similar formations, but it gives you like a, when in doubt, zoom out. It gives you a much broader perspective on what is actually going on, and makes you realize, hey, price-wise, they were large bubbles that happened in 2011 and in the 70s. But in terms of how long they were at that price and how much volume there was up those levels, it's not significant, and you can see more clearly what is really going on from different time frames. And really, what's going on is it's an energy thing that takes a lot of energy, a lot of buying or selling to make massive moves, and it can't sustain permanently. And so this massive move that we just saw a couple years ago when it went up to 29, that took a lot of energy, that fizzles out. You have to build a base again and have a lot of consolidation, a lot of buyers and sellers coming in, establishing a new base before you'd see another breakout, another big move, like a coiling spring and then a release.
Joe, you could take my spot, man. You don't need me. You explain it so well. I'm so jealous. But check, look, guys, just look at this chart. I have shivers. I'm a chart trader aficionado. Look at the reverse symmetry move, guys. See that? People say, what happened 40 years ago doesn't matter. Look at that. Look, you see that fractal I had on the first chart? Look, this is 40 years ago or 30 years in between those peaks. Look at the candles. It's perfect reverse symmetry. So once you go down and you have that base where nobody cares about silver, man, as soon as you break out and you go up, it's a perfect reverse image. The energy down, no buyers, there's nobody up. That's where you make huge amounts. Well, okay. Like that's your edge, guys, as a chart trader. And look, it happened again here. Look at that perfect reverse symmetry move all the way to 31. These things, they just happen over and over again.
All right, we've got time for one more chart here. Let's take a look at some other good examples of moves that are taking place right now.
Okay, inflation, oil, it's a hot subject, and rightly so. Look, I love history data. This is oil since 1862, guys. There's no more bigger picture than that. But what you got to see is higher lows over the centuries. This is your fiat currency getting debased. Even if it was pegged to gold back then, it's still, we're crescendoing plateaus, guys, over and over again. And every time you reach a new plateau, oil doesn't give it back. So here it was a plateau, explodes up, plateau, explodes up, plateau. And guys, we're right back at a new plateau. And this is my greatest, it's a very good tool. It's a 7-year rate of change. So all that energy that a chart had going up or down, after 7 years, the energy that it had before, or that weight, that momentum, those capital flows, they diminish. It helps, it permits you to have a rate of change that changes. And for US oil, every time the 7-year rate of change started exploding from the bottom, going all the way up, going through also some trend lines, right? Valid trend line breaks. It had huge explosions. And all that peak here where everybody was piling in 2007 at 150 oil, it's going to 300, oil supply cliff or whatever you heard fundamentally. That was actually, you saw you were stretched from the 7-year moving average. It tried again. It couldn't go back above. And what happens? You could do TA, guys, on indicators. It went all the way down. It's more like those reverse symmetry moves I showed on the silver chart. It's happening all over again for oil. And right now, all this pressure here, all the people that bought here, they're not there anymore. So it's permitting the rate of change, the 7-year rate of change, from going from negative rate of change. So that means if you bought it 7 years ago, how much money are you making? It permits it to go back up, guys. And this is, yeah, you see my rocket ships? But honestly, until the rate of change hits this resistance right here, oil has a lot of room to go up, guys, at least to this line here. Then we'll see if it breaks out above and it goes like full crazy mode. But like these are roadmaps. I like drawing not straight lines, some squiggly lines to show guys, look, you're going to hit resistance, support. So you prepare your mental. If it doesn't go up in a straight line, you don't like shoot Patrick. Hey, Patrick, you told me it was going to 400. Yeah, but guys, it's like Joe explained it so well there. You hit resistance, then go back to test support, consolidate. So these were some of my targets. If if we reenact these moves, these analog moves, these angle of ascents, 39 or 50 degree for that duration and price. Look, these are my targets: 440 in 2027, or maybe a low water mark of 200 in 2027. And you could overshoot on smaller time frames.
Yeah. For anybody looking to trade these moves, I'm glad you mentioned that it's not in a straight line, and a strategy that many traders use when they're looking at something like this and they're saying, okay, I like the setup for oil. It's got a lot of potential, but I know there's going to be volatility along the way. And as it goes higher and higher, the risk of it ending its run gets higher and higher. So a very easy strategy a lot of traders use, I'm not sure if you use this yourself, but it's called core and explore. So you've got your core position, let's say in oil, and as it gets to these points where it looks like, hey, it's going to stall out here, you're going to pare your position back. You're not going to sell it all, but maybe you take it from 100% to 80% or 70%. And then on those moves back, as it retraces, as it consolidates, then you pile back in, get it back up to 100, 110%. So you've got a core position that you're selling when it looks overextended and buying more of when it looks under bought, and you trade around that while it's going through that long-term move that you're watching.
And yeah, if that fits well with human psychology, because all or nothing, guys, it's not good. You're like a danger to yourself. Just like at the bottom, don't put everything in on the breakout, right? You scale in, and there's always retraces, guys, to retest lines. So don't panic if it broke out and you missed it. Within 1 to 3 months, usually there's a back test of an important breakout line. So what's the stress, you know? And on the way out, you're right. Like nobody's going to catch the top, but you could start scaling down when these indicators, they start getting really stretched away from mean and all that stuff, and you're deep in the cycle. Yeah. Be smart about
it. And it also helps you from accidentally misreading things, or being out when there's, some surprise, war breaks out, something like that, and you're like, oh, I sold because it was starting to retrace, or it looked overextended and I missed out my entire position, and it went up by 10, $20 a barrel, something like that. So it prevents big mistakes like that.
Yeah.
So great. Well, I really appreciate this. Thank you so much. And this was a lot of really great information. And if anybody wants to find more of this information, charting, I know you're on Twitter. What's your Twitter handle?
It's BadCharts1, guys.
BadCharts1. I'll have that link to the description below. And then what is your website?
Yeah, everybody, NorthstarBadCharts.com. Come and check out all the cool charts there.
Sounds good. I'll link that in the description below as well. As always, thank you guys so much for watching. Have a great day.